Hello, good afternoon, everybody. Welcome to our special edition Fed rate announcement thingy live here. We are. I ran out of juice. Hey, John. Hey, Mike.
Hey, Peter.
Nobody was talking, so I jumped in and I didn't really have a plan.
It's because I was figuring out how to what I needed to mute. I was in YouTube, vMix.
I was doing the same thing. I was getting an echo. I'm like, oh.
Where do I go?
Well, we are about 11 minutes away from stage one of the festivities. So for anybody that's joining us out there, hey, thanks. Good to be here. Let's make sure everybody knows what's going to happen. 2 o'clock, we are expecting the Fed rate announcement electronically, which means the Fed will basically blast out their rate decision. We'll find that out probably a little bit after 2, but immediately the computers are going to electronically read that and start trading. Pretty much right at 2 o'clock, you're going to see the market move. I can't tell you where. I have no idea, but I can almost guarantee, like a 99.9% certainty, is going to move. Then we've got to figure out how far it's going to go and where will it come to a stop. Usually what happens is it comes to a stop somewhere, it makes a little bit of a reversal, and then it figures out where it wants to go next, which could be anybody's guess. That will take us till 2:30 as it sort of figures all that out until the press conference starts at 2:30. Powell hits the stage or sometime shortly thereafter, has some fixed comments, and then we get to the questions, which is usually where the interesting stuff happens. Now, it all depends. His interesting stuff could come in the fixed comments if he does something unexpected. So as a reminder, all expectations in the market are that we're going to get either a 25 basis point cut or a 50 basis point cut. So 0.25% or 0.5%. That's what everybody expects. If anything happens outside of those two potential outcomes, that move I was talking about at 2 is going to be insanity. But nobody expects that to happen. So that's what we're waiting for. We've got about 9 minutes until, we all find out together. I don't know. So my vote's been on 25 cents, a quarter point cut. Well, not 25 cents, so a 0.25 percentage point cut forever. John, Mike, what do you guys think? Do you have a vote?
So I think that he's going to come with a 25-point basis cut, but I am hoping to get a 50-point basis cut.
Oh, okay.
So I want the big cut. I need it. Really, really drive those interest rates crazy.
Well, yeah, you're looking to buy a house too, so you really want it to go down.
Yeah, I want that thing to go down, so I'll take that for sure.
There you go.
I'm leaning toward the conspiracy side of things. Like someone said in the chat room, I think there's going to be a little political pressure to make this into a 50-point cut. So things look a little rosier in the stock market, perhaps. That's. I'm always part conspiracy theory, so I'm going there.
Okay.
That is cool, John. You do like conspiracy theories.
Love them. They're the best.
They bring entertainment, don't they?
You got to have one that you're really spun up on and have a lot of like bizarre knowledge on. So when you're at a party or something, you can kind of like make people uneasy a little bit. You know what I mean? I like I'm pretty classic Kennedy assassination. I just like to keep people a little on their toes and like, I don't know if I should be talking to this guy. That's my move.
Have you read the? I've got it up on my bookshelf here. Have you read Stephen King's book 11/22/63?
I have not, but I saw part of the movie. I got to finish it.
There's the miniseries, the one with James
Franco.
Yes.
It was a miniseries, right?
Yeah. Anyways, yeah. Well, the miniseries is pretty darn close to the book. So if you watch that, you probably don't have to read the book. But like most adaptations, they cut things out. But that's okay.
So Peter, would you know why T-Mobile stock is going kind of crazy today. T-Mus. T-Muse.
I don't know. I haven't even looked.
I did a big, huge drop at 12.30, and now it's kind of recovering as they increase the dividend percent. So did they have like some announcement or something coming out of nowhere? I wasn't tracking, but it looks like they had like earnings in the middle of the day if you look at it.
Wow. Did it jump up or down?
It jumped up,
up,
went crazy,
then
dropped down, and it literally looks like earnings.
They did make an announcement. They announced this T Priority system, which is a new solution built with first responders in mind.
Okay.
It's going to be built on T-Mobile's 5G standalone core. Ensures first responders get lower latency and faster 5G speeds and more consistency. Blah, blah, blah. I'm not sure who qualifies as a first responder or how you get access to this. They don't specify that, but okay. T Priorities new first responder rate plans to launch later this year and available for state, local, and federal agencies. So I guess that's their announcement.
I do know that they, like Verizon, will deprioritize your bandwidth when there's an emergency going on. So it happened a lot when I was back in Camarillo when the fires were going. So they were giving the first responders priority on the networks, and we could barely make a call on our phones. It was quite frustrating, actually.
There you go. Mike, are you listening to Benzinga so that we actually know what the rate decision is?
Benzinga. Okay. I got Benzinga in my left ear. I'm going to be waiting right at that time, and I'll tell you as soon as I hear. So I may cut one of you up if you're talking.
Oh, that's all right. We'll count on you then to let us know. So the other thing we have to do is you have to pick on what you're going to watch and if you think you're going to trade. I don't normally trade these things, but today I'm thinking I might give it a shot. I know Tesla's rate sensitive, so I'm thinking of watching Tesla, and I'm thinking of watching NVIDIA just because I think the semi sector will be a little sensitive to rates, although NVIDIA's got a lot of cash, so they probably don't care. But
I'm going to watch small caps.
Small caps. Oh, okay. The index or specific small caps?
Well, I'm watching IWM, TZA, TNA. So yeah, I think they are probably the most interest rate sensitive sector.
That's fair enough. Yeah.
And we've got just a little more than 3 minutes.
And Brian, I asked everybody else's guess. Do you have a guess as to what the rate announcement's going to be?
Yeah, I said this morning and kind of maintained yesterday. I think it's going to be quarter point.
Oh, you're in the quarter point camp too. Okay.
I am in the quarter point, and we did a poll this morning. I don't know if you were there for that, but
I see it.
2/3 of the room were in the quarter point corner.
Yes.
But who knows?
John's our outlier here.
I'm all alone.
Yeah. John's in the 4% that think it's other.
That's okay. We need differing opinions. Yeah,
Brian,
I could see. You can make arguments either way for this. If he's looking exclusively at the labor market, it has been weakening, so better to get ahead of it.
Brian, what do you like again? IWM, TZA, and what was the other one?
TNA. There's TZA and TNA.
Gotcha.
TZA is the bear, and TNA is the bull.
The bull. Yeah.
I like the bull.
All right.
So right now they're basically flat.
Yeah. Waiting. Huh. They managed to get the SPY and the Qs right at yesterday's close. So waiting 2 minutes. We'll see the craziness fire.
I was trying to get the latest update on the FedWatch tool that would tell us what the sentiment is, and I think their servers are getting hammered because I can't. Their web page won't fully load.
Government at its finest.
Well, it's I don't know. I said privately run, isn't it? Because this is the CME group that runs this website.
CME runs it. You know the.
I just think they're not scaled up for this.
Yeah. I realized what the abandoned building outside my window is finally. I ran by it today. It's the
Okay.
old Kansas City Federal Reserve building,
Oh,
believe it or not. I was like, oh, now I know why that building, nobody's renovated it yet. That's it.
there you go. You
And they haven't sold it to anybody.
1 minute.
All right, last minute here. Oh, this is so exciting.
Yep, that book cleared on Bookmap, that's for sure.
Oh, please, Fed, increase the rates. I want to see the market.
I think,
It's not going to
I
happen.
think you'll
Now
get,
it's a conspiracy theory.
Yeah, that's not going to
You'll
happen.
get,
But
yeah, you'll get Jared's moved to 55.25 if we do that.
hey, Brian, yeah, how
Expected
does Bookmap look? I imagine a lot of orders are clearing out right now.
Oh, I
It's gonna
think
be
it's
pretty
probably orders are empty. Bookmap.
Yeah, I can't imagine there's much
All right,
on the
here we
book
go.
at the moment. 4, 3, 2, 1.
Oh,
Ooh,
it's
Whoa!
oh,
Up, down, volume.
0.5.
Here we go. Where are we going? Up. Looks like.
0.5. So
Going up.
it lowered at 0.5.
Oh, it was
Really?
0.5.
Okay. Oh, they
Hey, I
did
was
go with
right.
the big one.
I was right.
Okay. So that explains the jump up.
All
We got
right.
that. We got to have. I guess
I'm long. I'm long
majority
TNA.
was. Oh, look at that! Brian went long TNA already.
Just selling some here at 45.
Thing finding a
I'm
little-
surprised they went for the half point cut, but it looks like the
Yeah.
majority was correct. Again, 2/3 of the analyst community
Yeah.
thought that it was going to be a half point, so I was wrong. All right.
Yeah. The Fred futures was correct.
Yeah.
Just selling a little bit more, 45.70. Ooh, going to go to 46.
whole tech sector is getting a lot.
Diddly, diddly, diddly. Here we go.
Look at the SPY. Oh my gosh.
46. Here we go.
Oh gosh.
Look.
Oh my goodness.
Gosh.
Great googly moogly.
Well,
Wee.
hurrah. I guess that's clearly now a new all-time high, right?
All-time
That is. Yeah.
Definitely.
On the
Will it
SPY,
close
not
at
on the
one?
Qs. Yeah, well, we'll see.
We get the settling. See how it settles out here shortly.
Yeah.
Let's see what Powell can do to excite the markets.
Yeah, it'll be
gave it all
interesting to
back.
see what happens. Yeah. Oh, already? Oh, yeah. Look at that.
Yeah.
Google's right back
Yeah,
there.
lost its whole move. Amazon's losing about half of what it popped up to. Microsoft, same thing. So Nvidia's holding it the best on, at least in the stuff I'm watching. And oddly, Coin is holding very well too for what it popped. Don't know why.
Nvidia definitely holding out there for a little bit.
So I've gone the other way, and I've gone short on Tesla. Just took a partial. See if we can get. See if we can lose this move on Tesla. I'm not taking any risk on it. Move my stop aggressively to break even. Come on, Tesla. In at 233.30 is my short entry price. So I don't have that much room here. And as I said, if it comes back up and hits that, I'm just going to get out. In fact, I'm going to move that stop down just a couple of cents, just in case. I don't want to get caught in case it pops again.
Like we said in the pre-market and at the open today, it's like a second open for everybody. So
Mhm.
Yeah.
you definitely get the moves.
Here we go. Come on. 232. I want to hit 232.
I got my wish though. I got the half a point.
Yeah. There
Yeah.
we go. One taking
There you go.
apart. So this is typically the move that I've been telling everybody about that happens, right? You get the initial pop, you get a little bit of a pullback. Doesn't mean, like, I don't have no idea where we're going longer term, but I'm just, instead of playing the pop, I'm playing, the other side of it. So
Google's right back down to where it was before the announcement, which is pretty surprising. It's the only Mag 7 stock that hasn't held anything.
I'm out of TNA.
come on.
I don't know. Let's see see if this pop can hold,
Yeah.
or if this was all just baked
I'm
in.
going to take a little more off here just because I think it feels like we're about to pop back up again. Could be wrong, but the momentum has sort of waned, and I was really just playing momentum on this. So here, let me share. Break even. I'll take a picture for everybody. Share my trade in the chat room just so.
There we go.
Members
We're
know
going
what-
to partial on NVIDIA. Move stop to break even right there at R3. See if we can't get this to keep going up to the high of day here.
So Mike's playing the other side of. I played the pullback. Mike's playing the rebounce on the other side of the pullback. I love it.
Oh,
So
come
we
on,
have-
NVIDIA.
we have
Don't
three-
die out there.
We have three of us that all played this differently, right? Brian played the initial pop. I played the pullback. Mike's trying to play the retest.
Playing the
Yeah.
bounce.
John,
I
man, what are you
like
doing? You're
how-
doing nothing.
I'm looking for a rebounce as well, and I'm trying to figure out what I like. I kind of like TNA. It's a little outside my wheelhouse, but
Taking a little bit more off there at R3 because I would have liked to have seen it kick through without pausing here, but we'll see.
Well, and I'm hoping it doesn't in the short term.
honestly, Peter, I'm just going to pull up my
Yeah.
Vanguard account to make myself feel better for not taking a trade. So we'll see.
There you go.
There you go, John. There you go. That's
See the
one way to
retirement
do it.
account popping up a little bit. That's always good. Yeah.
There we go.
Yeah.
Yeah. Oh, that's nice.
Come on, NVIDIA, you can do this.
All right.
Just for our
NVIDIA might go here.
I know
Got a order at 117 and some orders at 118.
Yeah, I might try NVIDIA here. Let's see. Let's go for that 117 break. I'm looking for an entry up around there. The SPY is trying to get through the previous day high, by the way, which is a tough level there. So as it
Yep.
struggles there, it might be making other things have a hard time.
Yeah.
I do like NVIDIA does have a nice order up at 117 right now on the book map, which is what I'm trying to get to for another
Yeah.
partial.
And it's good to see how people trade it differently. So I am a short bias trader, so I took the pullback. Mike's very comfortable in his longs, so he went with NVIDIA, trying to regain the high. So Everybody can have an opportunity. I was here. Let me throw onto the screen here just quickly so you can see. So this is the type of trade that I prefer. So that's what I focus on. I'm not sure if it's in the window there. If you can see it, there we go. He's going to make it big for me. So you can see my entry here at the top of this candle. The partials I took on the way down. Now I'm just hanging into this. Just waiting to see what happens. Right? It's either going to drop back to the level it started from, and I'll look at taking another partial if it does that, or it's going to come out and stop me out. Either way, right? I'm just sitting and waiting.
Out at break even on NVIDIA. That little drop right there, but got in right at the high of that first white candle after the pullback. So got a decent move out of it. Nice little stop. I only had a 25-cent stop, so I'll take the 45 cents.
Apple's given everything back at this point. It's back to its pre-news level.
So, and it does show that, there's excitement that the rate cut came in at half a point, but also that I guess that's largely been baked in, right? So that's why we're moving back to those levels, because like I said, the big money made, they picked their position earlier. So, I'm not surprised to see it move back. It doesn't mean they're still not excited about the half point rate cut, but it's already been priced into where things were sitting before this all happened. So,
yeah.
Jared, did you trade Dash today? Because I know that was on your watch list.
Yeah, he and Megan were watching that, and I think Megan traded it. I'm not sure.
DoorDash.
Yeah.
Yes, he did.
Had a nice little breakout after a slow start.
It is going to be interesting how the market perceives Jerome Powell's comments today. I think that's going to have some impact too. Since he went with since he went with that higher rate cut, is he saying, "Hey, we're going to wait and see," or we foresee some more rate cuts coming?
Right.
So
earlier today, I did try to have Grok, the AI from X, draw or make an image that I asked it to make, and it's supposed to be Jerome Powell, but it didn't really deliver. I'm going to drop it here in the chat room.
Oh my goodness!
I mean, it is a gray-haired white dude in a suit, but it didn't quite deliver.
Didn't quite deliver for you.
It didn't deliver.
Can you send that to me, John?
Oh, of course.
It's his wrinkly face that you don't get.
Yeah.
AI has a problem with that for him.
We seem to be Tesla seems to have settled here at 232. I'm hoping to get down lower. I'll take another partial if we get below 231. I'm running out of shares, so I didn't take that big of a size. Come on. A little. There we go. There we go. There we go. There we go. Okay, so took that partial right at 231.
There you go, Peter. That short coming in for you.
Yeah.
Yes, sir. Good trade.
Yeah.
And I think if we do hit, I don't expect it to go lower than where we were trending before the announcement. So if we get 230.50, I'll just get all out of this trade, and then we'll wait for the comments. Oh, look at this. We're getting there quick, though.
You're already there.
Okay.
You're already there.
You know what? I'm going to do what I said. I'm getting all out. So, okay. Good. I like it. I'll take it.
NVIDIA is touching the VWAP right now.
Yep.
Right.
NVIDIA's back down to where it was before.
Yeah.
So play that momentum. Now let it all settle down and get ready for his comments.
Wow. We're going a little lower than I expected.
If you look at Coin and Tesla, they both went right to the previous day high and rejected from there. I mean, it's really a timing thing because everything kind of rejected on the exact same candle, but still, it's interesting. Right, almost to the penny on those.
Yeah.
Yeah.
Amazon went right to its R3 level and then died. Again, doesn't want to go above 189. Must be Bezos selling some more stock there.
I grabbed few shares of Nvidia. 115.
Ooh, Brian going for the big
If
banners.
we,
There you go.
see
Yeah, I'm not.
bouncing.
Maybach, you're saying Z, so Zillow. I'm not surprised Zillow would hold up because it would be very interest rate sensitive, I would assume, right? Their
Yes,
business model
Yeah.
depends on people buying houses.
Like me.
Like you, yeah.
like Mike.
Speaking of which,
we're
I don't
ready
have the
to-
rights to it.
Great news for me today. I like it.
Mike, I can't play you your normal Wednesday tune
Oh,
because
yeah.
I don't
You're
I
on
don't think
YouTube.
I have the rights for that. I don't want us to get like canceled
In
here. I
trouble.
guess.
No.
We'll have to wait till after we're off YouTube.
Yeah.
All right. I'm going to take some profit here. Woo!
Nice pop
115.45.
for you there, Brian.
Here we go. Selling
Look at that.
some
Paris.
more at
Paris,
115.50.
Tesla, NVIDIA.
Oh, Paris. I love it.
Short.
Love it.
Paris
Well,
is back. I'm back,
Look
baby.
at this. We have somebody, one of our moderators, that's taken every piece of this move, right? Every piece of it. Somebody's taken a trade on it. Brian did
Yep.
the original move up. I took the pull back. Mike, you took the bounce, and Paris took the drop. So look at that. It's beautiful.
We're all over it.
Yeah. It's awesome. That's awesome. But it just shows how everybody sort of sees it differently or gets comfortable at a different time, right? In the trade. So I love it.
I rounded it out, Peter, by not taking anything. You had to have someone sit on their hands.
Well, somebody's
Somebody
got to
else.
say it's not my move, right? So that's okay.
It's okay.
Yeah, I was waiting for the secondary breakout, but that did not happen. And I couldn't take anything on that first candle. That just,
Right.
I don't know. Couldn't do it.
All right. Taking some more off. 115.90.
Mhm.
We're going to 116.
And now we got Brian making the move back up. I love it.
Yeah. That was the VWAP bounce.
Look at that one go. Right to the pre-market high, 116.
Well, I'm glad I got it when I did. That's good. I feel pretty good about that trade.
I think we're gonna. Those orders are still sitting up there at 117 too.
Yeah.
See what. Got about 14 minutes if Powell comes out on time.
Mm-hmm. Yeah, I've got both the Fed video feed going here as well as the media feed. So we'll see. Sometimes one is ahead of the other. We'll see which one's first today.
Jerome Powell. See.
So of all the stocks I'm watching, there's 12 that I'm looking at. Meta is the one who's about to get back to the high of the move for some reason. I don't know if there's anything significant. I'm going to try some Meta here. This might be famous last words.
Apple's busting a bit of a move here too. Angel, nice short trade. Hannah, TNA is an ETF for basically the small caps IWM. So, but the only thing about TNA is it is obviously a different price, and it's a beta ETF. So, if you get a move on the IWM of 1%, I think TNA is 2%. It's a double, I believe. Or
It's
is
3
it
to
a
1.
triple?
It's
a
3 to 1. Yeah.
So if you
Yeah.
think IWM is going up, you can get three times the joy by using TNA, which is why I traded TNA over IWM. I mean, I could have done options on IWM as well.
Come on, Meta. Go for John.
Took some off on Meta at yesterday's high or 2 days ago, whatever it is.
Not
dropped
getting through
four.
previous day high. I'm moving my up. Yeah, I moved my stop to break even. Wood's hanging up at 542 where the previous day high was. I'm afraid it's going to do what some of these other stocks are doing. So just wait for.
I just got stopped at break even.
Look at that. Everybody's in on the action now.
Yep. So what I was saying was TNA is a good long for the IWM small caps or just the small caps. And if you felt bearish, you would use TZA, which is 3 times to the downside. Wow. TNA is coming right back up here.
Were you able to stay in that one, Meta, John?
I'm out. I'm thinking about re-entering. I'm just watching it here. I don't like the SPY's going to come up to its own previous day high here, and the Qs are as well. And if they're going to struggle there, everything's going to be correlated with that struggle. So I don't know. I'm a little torn here. We'll see.
Yeah, I took some off right up there near that. What is it? Yesterday's high. And then it just did that drop down with me out. Does look like it wants to go. I mean, it's got orders up top, 543, 543.50, 544.
Yeah. I got back in. Got a bit of a move here. The spread's big enough that it's definitely problematic.
Yeah.
Let's see if we can get the bid up in the high 542s.
Yeah, it's got about a 30 cent between 20 and 40 cents spread on it right now. Peter, you should be vindicated about getting out where you did.
Oh yeah. I feel great about it actually. I didn't leave much on the table. I mean, I got pretty close to the low. It did dip below 230 briefly, but yeah, it's a good decision, I think. So pretty happy with that trade overall.
Amazon's making its way as well to the high of day. It's at 180.
I'm hoping for 117 on
NVIDIA.
but I don't think it's going to make it there. We get close.
It's twice that it's pulled back from it, right?
Yeah.
First time is 116.86. This time 116.89. So it got a little higher on this move up. I think if NVIDIA can get through that 117, I think it's going to try to run.
Yeah, I think so too. Problem is Powell's going to start talking in about
7 minutes.
7
Ruin
minutes.
all of our hopes.
Yeah, you might. You don't know.
There's a statement right there, Brian. The problem is Powell's going to start talking.
Well, and it's just he could say something that the algos just react to.
Well, he's likely going to
And it
say
could be
something
nothing.
that'll cause the market to do something.
Yeah.
Yeah, it'd be funny if we lost everything that we just gained today. If just based on what he starts saying.
The SPY is still staying above that all-time high mark. So
Yep. Cues.
there's Peter.
I'm right here. What are you looking for?
Fed.
Do we have Jared? Is that Jared?
No, Jared. Jared's busy.
Jared is busy.
Yeah.
I know he was looking for an expected move, one end or the other.
Yeah. He wanted. He was like, yeah, sort of like John, right? He wanted crazy things to happen.
Or was it 57.25 on the SPY? Was the high?
$570, right, Jared? You had a 570,
Yeah,
and then I think it was
almost
550.
got there. Nvidia is kind of crawling its way back up here. Let's see if there's not a lot of volume though. That's the only.
It's
I'm
the
not
scary
liking
part, right?
Yeah,
But that order at 117 is just getting bigger and bigger on Bookmap. Getting bigger and bigger.
Bigger and bigger and bigger.
cues are going.
I think if that bid gets up in the 116.90s, it's going to be a good sign. The two failure points before were 86 and 89. So
Yep.
that's going to be just getting the bid over that is going to be potentially what it needs.
There it is. Over.
Yep, just a second. Yeah,
And then
by a
it
penny.
just
I don't know if the bid went over, but the transaction did. Somebody bought up there.
Interesting. Netflix is having a down day. It's unusual. It's down under $700 again.
Yeah. Well, it's not alone. I mean, Microsoft is in the red.
That's true. Adobe is, man, it is struggling after that earnings report from last week. It's had three days in a row where we've been down. It's got to be able to find a bottom here somewhere. Might be in the 500 range.
there's a 200 moving average on the 15. Right there at 116.77 right now.
Whoops,
That's where
cues
we
are just
kinda
dropping.
drop.
Did Powell stumble going to the platform?
He's not there yet. At least not that I see.
Peter, are we streaming Powell's speech? I think we are, right?
We can. Maybe just part of it. I mean, it gets.
Are we allowed to?
I don't know. It's a good question.
Yeah, it's
Be
public.
able to.
It's fine.
It's public.
I think so.
Yeah.
There you
Public
go.
domain.
Brent says it's public, so I think the initial
Brent
part
says
it would
it's
probably be
okay.
good to do. We'll all be listening to it anyways, so we might as well.
Like, we wouldn't be able to stream Bloomberg's version or anything like that. We're just taking this straight from the Fed Reserve site.
Okay.
Bob is actually doing pretty well compared to other things. It's exceeded its initial pop and it's gone into the green here. Might go for its high day.
There we go.
Which one is that?
Baba.
Oh,
It's not something that doesn't give great moves, but it's just looking a little more bullish than other things at the moment.
We're taking another run at 117 here on NVIDIA.
Her book
Yep.
is just flipped on NVIDIA. Look at this.
You notice the pullbacks have been right to the 9 EMA on the 2-minute chart. And
Yep.
every time it hits, it bounces.
The cameras are on.
So that's what I'm using right now for the remainder of my position, which isn't much. Just as long as we can stay above that 9 EMA, we're still in an uptrend. Tesla's looks like it's trying to push to back to high of day here. All right. 30 seconds.
If he's on time, he's coming
If
out
he's on
with
time.
a purple tie.
Maybe Andrew could have loaned him some of his Burning Man gear.
Yeah, that would have been good. Purple or pink. That's what I thought.
That would be
Being away
something.
from
Nobody would
Blue or the red.
nobody would know what to make of it. He came out in a steampunk outfit.
It is
What does that mean for the economy?
now?
Yeah.
On the,
I think you'd see some heavy
Retail.
selling.
I think you might.
oh,
There he is. There he
Purple.
is.
Maybe you should come out in a bolo tie.
look at that!
Good afternoon.
What I
Purple.
called, I called it
My
right there.
colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a 0.5 percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years. In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a notable step down from the pace seen earlier in the year. The unemployment rate has moved up but remains low at 4.2%. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures.
Got long Nvidia at
The median projection for the unemployment rate in
116.97.
the SEP is 4.4% at
Me and
the
you
end of
both.
this year, 0.4 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer run goal of 2%.
Stop to
Estimates
break
based
even.
on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and
Partial.
forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.3% this year and 2.1% next year, somewhat lower than projected in June. Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance, and we are attentive to the risks to both sides of our dual mandate. In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by a 0.5 percentage point to 4.75% to 5%.
No.
This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will
Rest of
continue to
NVIDIA out
enable
of break even.
further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2025. These median projections are lower than in June, consistent with the projections for lower inflation and higher unemployment, as well as the changed balance of risks. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve.
All right, here we go to
Steve
Q&A.
Leisman, CNBC. Thank you, Mr. Chairman, for taking our questions. In July, you said you weren't necessarily thinking about a 50. You didn't want to be specific, but you said you were thinking about a 50. The inflation data last week came out a little firmer than expected. Retail was strong, third quarter GDP running 3%. So what changed and made the committee go 50, and how do you respond to the concerns that perhaps it shows the Fed is more concerned about the labor market? And I guess, should we expect more 50s in the months ahead? And based on what should we make that call? Thank you.
Get ready for the market.
That's like a four-part
Okay,
question.
A lot of questions in there.
Yeah, exactly.
Let me jump in.
Kyle just said
Since
the same
last
thing.
meeting- Okay, the last meeting,
Yeah.
we have had a lot
There
of
you go.
data come in. We've had
Great
the two
minds thinking
employment
alike,
reports,
Peter.
July and August. We've also had two
Or
inflation
broken
reports,
clocks.
including one that came in during blackout. We had the QCEW report, which suggests that suggests that the payroll report numbers that we're getting may be artificially high and will be revised down. You know that. We've also seen anecdotal data like the Beige Book. And so we took all of those and we went into blackout and we thought about what to do, and we concluded that this was the right thing for the economy, for the people that we serve, and that's how we made our decision. So that's one question. What was the second and
How
third?
do we make sorry, thank you, sir. How do we figure out in the months ahead, is there another 25 or 50 coming in? Based on what shall we make that call? Thank you.
Sure. So, a couple things. A good place to start is the SEP, but let me start with what I said, which was that we're going to be making decisions meeting by meeting based on the incoming data, the evolving outlook, the balance of risks. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago when inflation was high and unemployment low, to a place that's more appropriate given where we are now and where we expect to be. And that process will take place over time. There's nothing in the SEP that suggests the committee is in a rush to get this done. This process evolves over time. Of course, that's a projection. That's a baseline projection. We know, as I mentioned in my remarks, that the actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause if that's appropriate. But that's what we were contemplating. And I would point you to the SEP as just an assessment of where of what the committee is thinking today, what the individual members rather of the committee are thinking today, assuming that their particular forecasts are realized.
Go to Chris.
I'm sure
Hi,
on
Chris
video.
Rugaber at Associated Press. Thank you. The projections show that the Fed,
Nice call
Fed
on
officials
that
expect
short.
the Fed funds rate to still be above.
Brian, I
their
was
estimate
thinking
of
about it a
long-run
little bit
neutral
earlier
long
at
next year.
117.
So
Yeah.
does that suggest
Does seem to be showing some weakness here.
for that entire period? Does that threaten the weakening of the job market that you said you'd like to avoid? Or does it suggest that maybe people see the short-run neutral as a little bit higher?
I think the way I would really characterize it is this. I think people write down their estimate, individuals do. I think every single person on the committee, if you ask them what's your level of certainty around that, and they would say there's a wide range where that could fall. So I think we don't know. There are model-based approaches and
it covers
empirically based
some
approaches that
160,
estimate
50.
what the neutral rate will be at any given time. But realistically, we know it by its works. So that leaves us in a place where where we expect, in the base case, to be continuing to remove restriction, and we'll be looking at the way the economy reacts to that, and that'll be guiding us in our thinking about the question that we're asking at every meeting, which is our policy stance the appropriate one? We know, if you go back, we know that the policy stance we adopted in July of 2023 came at a time when unemployment was 3.5% and inflation was 4.2%. Today, unemployment is up to 4.2% and inflation's
Covers
down to
more.
a few tenths
1640.
above 2. So we know that it is time to recalibrate our policy to something that is more appropriate
Oh, here we
given
go.
the progress on inflation and on employment moving to a more sustainable
Covered some
level.
more.
so the balance of risks are now even. And this is the beginning of that process. I mentioned the direction of which is toward a sense of neutral. And we'll move as fast or as slow as we think is appropriate in real time. But what you have is our individual accumulation of individual estimates of what that will be in the base case.
Back off the highs.
Howard?
Yeah.
Howard Schneider with Reuters. How close was this in terms of the decision? You do have the first dissent by a governor since 2005, I think. Was the weight clearly in favor of a 50, or was this a very close decision?
I think we had a good discussion. If you go back, I talked about this at Jackson Hole, but I didn't address the question of the size of the cut, left it open, and I think we left it open going into blackout. And so there was a lot of discussion back and forth, good diversity of division, excellent discussion today. I think there was also broad support for the decision that the committee voted on. So I would add that
Looking for a
look at
loss
the
of
SEP.
116
All
here.
19 of the participants wrote down multiple cuts this year, all 19. That's a big change from June, right? 7 of them wrote down 3 or more, and 17 of the 19 wrote down 3 or more cuts, and 10 of the 19 wrote down 4 or more cuts. So, there is a dissent, and there's a range of views, but there's actually a lot of common ground as well.
Follow up to that, now that this is in the books, can you give us some guidance?
Oh,
as to
sorry.
involved as
I'm busy
the
talking on
basin
mute here. Look what he's doing, man. He's
Do you
eroding
expect
all
this
the
to
good
be
work.
running every other meeting?
Yeah.
Isn't that what he always does, though? I mean, honestly.
As I mentioned, there's no
Quick, someone run up and take the mic from him.
Yeah, exactly.
Enough's
Stop
enough.
talking.
Quit with the questions.
That's right.
inflation is coming down.
Where's that aide that goes up there and whispers in the ear and says, "You have an emergency. You need to get out of here.
Right.
Go."
And I'm very pleased.
Yeah.
Like the old gong show. You need someone with the gong. Get him out.
We've got pretty close here, 116.03. I'm not sure if we're going to drop again. Kind of a little nervous here that this is going to be support.
Yeah.
Is increasing. And so I wonder if you can walk us through why you see the labor market
I'm going to
stabilizing,
take
sort of
the
what's
rest
the
of this
mechanism
off,
there, and what do you see as the risks?
116.50.
Again, the labor market is actually in solid condition. And our intention with our policy move today is to keep it there. You can say that about the whole economy. The U.S. economy is in good shape. It's growing at a solid pace. Inflation is coming down. The labor market is in a strong pace. We want to keep it there. That's what we're doing.
That's why the Qs are bouncing back here.
Nick Timmeros of the Wall Street Journal. Chair Powell, does today's action constitute a catch-up in action given recent substantial revisions to the employment data? Or is this larger than typical rate cut a function of the elevated nominal level of the policy rate such that an accelerated cadence could be expected to continue?
What a question.
Multiple
Come
questions
on.
in there. But
So
I
there's
would
no
say,
way he can answer that question.
We don't think we're behind. We do not think we're
Yeah.
behind. We think this is timely. But I think you can take this as a sign of our commitment not to get behind. So it's.
Look
it's
at the
strong.
the
Sorry,
market
your other
bouncing
question
back
was-
here.
Well, is this about what happened in the employment data between this meeting and the last meeting? Or is this about the level of the funds rate, the high nominal level of the funds rate relative to what might be expected if you're trying to maintain
So
equilibrium?
I think it's about, we come into this with a policy position that was put in place, as you know, I mentioned in July of 2023, which was a time of high inflation and very low unemployment. We've been very patient about reducing the policy rate. We've waited. Other central banks around the world have cut, many of them several times. We've waited, and I think that patience has really paid dividends in the form of our confidence that inflation is moving sustainably down to 2%. So I think that is what enables us to take this strong move today. I do not think that anyone should look at this and say, oh, this is the new pace. You have to think about it in terms of the base case. Of course, what happens will happen. So in the base case, what you see is, look at the SEP. You see cuts moving along. The sense of this is we're recalibrating policy down over time to a more neutral level, and we're moving at the pace that we think is appropriate given developments in the economy in the base case. The economy can develop in a way that would cause us to go faster or slower, but that's what the base case says.
And if I could follow up on the balance sheet. In 2019, when you did the mid-cycle adjustment, you ceased the balance sheet runoff. With a larger cut today, should there be any signal inferred about how the committee would approach end state on the balance sheet policy?
So in the current situation, reserves have really been stable. They haven't come down. So reserves are still
Say
abundant.
base case again,
and
I
expected
dare
to
you.
remain so for some
Say
time.
it again.
As you know,
See what
the
happens.
shrinkage in our balance sheet has really come out of the overnight RRP. So I think what that tells you is we're not thinking about stopping runoff because of this at all. We know that these two things can happen side by side. In a sense, they're both a form of normalization. And so for a time, you can have the balance sheet shrinking, but also be cutting rates.
Colby. Thank you, Colby Smith with the Financial Times. Just following up on Gina's question on rising unemployment, is it your view that this is just a function of a normalizing labor market amid improved supply, or is there anything to suggest that something more concerning perhaps is taking place here, given that other metrics of labor demand have softened too? And I guess in direct follow-up to Gina is, why should we not expect a further deterioration in labor market conditions if policy is still restrictive?
So I think what we're seeing is clearly labor market conditions have cooled off by any measure, as I talked about in Jackson Hole. And but they're still at a level. The level of those conditions is actually
So
pretty
yeah, if you're
close
looking for
to what I would
trades,
call
be careful
maximum
out there.
employment.
We are heading into
so
the
you're close
chop
to
zone.
mandate, maybe at mandate on that. So what's driving it?
I think it might start
Clearly,
to take
payroll job
a
creation has
direction
moved down
once he
over the
stops
last few
talking.
months, and
Possibly.
this
Yeah.
bears
Yeah.
watching.
Yeah.
Meant by many other measures, the labor market has returned
also see
to
how
or
long they
below
let the questions go.
2019 levels, which was a very
There's,
good, strong
obviously
labor market.
a lot
but
of interest
this is
in
more
this,
sort
and
of
they know that.
2018, 17. So the labor market bears close watching, and we'll
Good
be
thing
giving
though
it
is
that.
he hasn't completely
But ultimately,
reversed
we
what
think,
it did
we
initially.
believe,
I've seen him
with
do
an
that a
appropriate
couple times.
recalibration of our policy, that we can continue to see the economy growing, and that will support the labor market. In the meantime, if you look at the growth in economic activity data, the retail sales data that we just got, second quarter GDP, all of this indicates an economy that is still growing at a solid pace. So that should also support the labor market over time. So, but again, it bears watching, and we're watching.
And just on the point about starting to see rising layoffs, if that were to happen, wouldn't the committee already be too late in terms of avoiding a recession?
So that's our plan, of course, has been to begin to recalibrate. And as you know, we're not seeing rising claims. We're not seeing rising layoffs. We're not seeing that, and we're not hearing that from companies that that's something that's getting ready to happen. So we're not waiting for that, because there is thinking that the time to support the labor market is when it's strong, and not when you begin to see the layoffs. There's some lore on that. So that's the situation we're in. We have, in fact, begun the cutting cycle now, and we'll be watching, and that'll be one of the factors that we consider. Of course, we're going to look at the totality of the data as we make these decisions meeting by meeting.
Michael,
Michael McKee with Bloomberg TV and Radio. To follow up on that, what would constitute for you and the committee a deterioration in the labor market? You're pricing in basically by the end of next year 200 basis points of cuts just to maintain a higher unemployment rate. Would you be moving to a more preemptive monetary policy style rather than, as you did with inflation, waiting until the data gave you a signal?
No, we're going to be watching all of the data, right? So if as I mentioned in my remarks,
Ask
if
him
the
another
labor market
question he
were
can't
to
answer.
slow
I
unexpectedly,
know, right?
then we have the ability to react to that by cutting faster. We're also going to be looking at our other mandate, though. We are we have greater confidence now that inflation is moving down to 2%, but at the same time, our plan is that we will be at 2%, over time. So, and policy, we think, is still restrictive, so that should still be happening.
I'm just curious as to how sensitive you'll be to the labor market, since you forecast we are going to see higher unemployment and it is going to take a significant amount of monetary easing to just maintain it.
So, what I would say is we don't think we need to see further loosening in labor market conditions to get inflation down to 2%. But we have a dual mandate, and I think you can take this whole action as take a step back. What have we been trying to achieve? We're trying to achieve a situation where we restore price stability without the kind of painful increase in unemployment that has come sometimes with disinflation. That's what we're trying to do. And I think you can take today's action as a sign of our strong commitment to achieve that goal.
Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You're describing this view that you don't think you're behind when it comes to the job market. Can you walk us through the specific data points that you found to be most helpful in the discussions at this meeting? You've mentioned a couple, but would you be able to walk us through what that dashboard told you as far as what you know about the job market now?
Sure. So we'll start with unemployment, which is the single most important one probably. You're at 4.2%. That's, I know that's higher than we were used to seeing numbers in the mid and even below mid threes last year. But if you look back over the sweep of the years, that's a very healthy unemployment rate. And anything in the low fours is a good labor market. So that's one thing. Participation is at high levels. It's, we're right adjusted for demographics, for aging. Participation's at pretty high levels. That's a good thing. Wages are still a bit above what would be, their wage increases rather, are still just a bit above where they would be over the very longer term to be consistent with 2% inflation, but they're very much coming down to what that sustainable level is, so we feel good about that. Vacancies over, per unemployed is back to what is still a very strong level. It's not as high as it was. That number reached 2 to 1, 2 vacancies for every unemployed person as measured. It's now below around 1, but that's still a very good number, I would say. Quits have come back down to normal levels. I mean, that could go on and on. There are many, many employment indicators. What do they say? They say this is still a solid labor market. The question isn't the level. The question is that there has been change, particularly over the last few months. And so what we say is, as the risks, the upside risks to inflation have really come down, the downside risks to employment have increased. And because we have been patient and held our fire on cutting while inflation has come down, I think we're now in a very good position to manage the risks to both of our goals.
And what do you expect to learn between now and November that will help inform the scale of the cut at the next meeting?
More data, the usual. Don't look for anything else. We'll see another report. We'll see another
just the
jobs
huge
report. I think we get
same old.
Actually, we get a second jobs report on the day of the
same
meeting,
stuff?
I think. No, on the Friday before the meeting. And inflation data. We'll get all this data. We'll be watching. It's always a question of look at the incoming data and ask what are the implications of that data for the evolving outlook and the balance of risks, and then go through our process and think what's the right thing to do. Is policy where we want it to be to foster the achievement of our goals over time? So that's what it is, and that's what we'll be doing.
Neil.
Thanks. Hi, Chair Powell. Neil Irwin with Axios. We've only been running a little above 100,000 jobs a month on payrolls the last 3 months. Do you view that level of job creation as worrying or alarming, or would you be content if we were to kind of stick at that level? And relatedly, one of the welcome trends of the last couple of years has been labor market steam coming out through job openings falling rather than job losses. Do you think that trend has further to run, or do you see risk that further labor market cooling will have to come through job losses?
So on the job creation, it depends on the inflows, right? So if you're having millions of people come into the labor force, and you're creating 100,000 jobs, you're going to see unemployment go up. So it really depends on what's the trend underlying the volatility of people coming into the country. We understand there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise. And the other thing is just the slower hiring rate, which is something we also
politically
watch carefully.
adjacent
so
comments
it does
now.
depend on
I
what's
know, I
happening
saw
on the supply
that.
side. And on the beverage curve question, yes. So we all felt on the committee, not all, but I think everyone on the committee felt that job openings were so elevated that they could fall a long way before you hit the part of the curve where job openings turned into higher unemployment, job loss. And yes, I mean, I think we are, it's hard to know that you can't know these things with great precision, but certainly it appears that we're very close to that point, if not at it, so that further declines in job openings will translate more directly into unemployment.
It's fascinating they're asking him
But
so
it's
many
been-
questions
it's
about
been a great
employment and
ride.
job openings. He has zero control over that, right? Like, it's
Yeah.
really just it has an impact on their decision, so they watch it closely. But it's not like he has any policy oversight or ability to actually affect the job market. So it's fascinating that, like, it's almost like reporters feel you can't ask government right now, so let's ask the Fed. Let's see.
Yeah. Well, this is the thing. The Fed has only so many levers they can pull. It's a lot of it's
Right.
Dependent on government as well.
They got the interest rate lever, right? that's what
Yeah.
they have.
Well,
to try to
and I get it.
control.
But the
it's-
tenor of the questions are less about how are you
Yeah.
going to react based on changing labor market conditions, or what do you expect your policies to have an effect. They're like, what do you think is going to cause labor changes? Are you concerned about like different aspects? Which again, I guess he could have an opinion on, and the Fed can have an opinion on, but it's not like the Fed again can directly change that. So
Did we
fascinating,
miss a
and you see
comment
the
or
market.
something from him? Did we miss a comment?
Well, I that's why I'm making this my comment. I think it's like, the market's saying, yeah, let's shut it down, man. Shut it down.
Yeah.
It's time to end the press conference.
Yeah. Well, and the problem, one of the big problems is government spending. It's just like neither party seems to want to, stop spending. I mean, they just keep talking about spending programs and tax cuts, and nobody's talking about a ballooning debt.
Yeah. It just depends on what side of the aisle you're on to what the spending's going to be used for, right? So
Well,
that's where
I
they differ.
it's just
One
tax
side
cuts
wants
and
spending
spending.
here, and one, I mean, it's just they both spend, so it's man. Look at that.
Yeah, well, that's the problem. Nobody's going to get elected on cutting spending and increasing taxes. So we just
Elect me, I'm going to take
Even-
money out of your pocket in this high inflation environment. Elect me, vote
Jesus.
for me, please. Yeah.
Well,
That's a weird message. That was a big drop lately.
yeah, get them off the stage.
with this unusually large rate cut?
I would just say that the U.S. economy is in a good place, and our decision today is designed to keep it there. More specifically, the economy is growing at a solid pace. Inflation is coming down closer to our 2% objective over time, and the labor market is still in solid shape. So our intention is really to maintain the strength that we currently see in the U.S. economy, and we'll do that by returning rates from their high level, which has really been the purpose of which has been to get inflation under control. We're going to move those down over time to a more normal level over time.
Just a quick follow-up to that. Listening to you talk about inflation moving meaningfully down to 2%, is the Federal Reserve effectively declaring a decisive victory over inflation and rising prices?
No.
Oh, he's already answered
we're
that.
not. So inflation.
Yeah.
what
These
we
people
say is
just
we
want airtime
inflation.
now.
The goal is to have
Yeah,
inflation
no.
move down to 2%.
Are you declaring
Just,
victory?
go back to
Sustainable
the
basis.
Come on.
They go back
I
to
can
their
answer
offices and when their boss says, "Did you get a question in?"
There you go. At least you're not cynical, Brian.
Yeah.
I'm not saying you're not right, but
encouraged by the progress that we have.
well, guys, we're just watching here, waiting to see. Again, if there's any faux pas here that Powell makes. I mean, the markets are in a dangerous position as far as I'm concerned. We're right back to the level we started at, right? If you look at the charts between now and 2 o'clock, we're just at that level. We actually dipped below where we were at 2 before the announcement. So, despite the seemingly good news for the market, we were trending higher. It looks like some of the press conference comments brought us back to level. So, obviously we want this thing to continue some direction, not just go sideways. But the risk is, of course, if Powell sort of utters the wrong words, the magic words, this market could drop. I'm sort of hoping that he ends the press conference soon, and maybe the markets will get some enthusiasm and bring us upwards into the close. That would probably be a preferable move, personally, I think, for us to see good price action for the rest of this week. So let's see what we get. I mean, it feels like this press conference should be coming to a close at some point soon, but it depends on how many questions they allow to keep going through.
I think we understand that now.
I'm watching
I don't
NVIDIA
think
right
the
now,
outcome
just
is in
seeing
doubt
if
again,
there's
as
a
long
potential
as
for a
market
bottom here.
rents remain under control. The outcome is not in doubt. So I would say
It doesn't look that way.
It doesn't feel like there's a bottom yet.
No. If it comes back up here, then maybe, but it's going to have to bounce from here.
This is right. The Qs are right where it spiked down right before the announcement, or right as the announcement was coming out. And it's losing that level, heading to the bottom.
Yep. Yeah, we're coming down to S3 on the SPY. We've already gone through S3 on the Qs.
Yeah. Both the Qs and the SPY is about ready to make a new low for the day.
How much additional demand that would make. I mean, the real issue with housing is that we have had and are on track to continue to have not enough housing. And so it's going to be challenging. It's hard to zone lots that are in places where people want to live. It's all of the aspects of housing are more and more difficult, and where are we going to get the supply? And this is not
all right.
something that the
I think
Fed
it's
can
probably
really
about time.
fix.
I'm not sure how much longer the press conference is going to go, but I think we should. We're going to call it a day here. We had our trades early. You saw how we traded it, right? This is less certain as to where the markets are going to go. Obviously, we're trending down right now, so if you're in a short, you're probably liking it. But again, be careful, because once the conference ends, it could jump. Or frankly, if just a differently interpreted comment is made, this market could move. So hopefully you got an idea of some of how we trade. I thought it was fantastic. We had 4 of us here on the microphone, and all 4 of us traded differently. We actually all took trades and traded that event differently, and I think we all made money. So that was pretty cool. Thanks for joining us for this special edition, I guess, of the it's not the pre-market show. This was the Bearable Traders event show, I guess. I don't know what to call it, but thanks, Mike and John, who had to go to. John had to go to another meeting, and Brian, thanks for all being here. Have the good rest of your day. We'll be back in the chat room, everybody. Talk to you tomorrow morning.
Take care, everybody.
Yeah. Goodbye, everyone. Have a good rest of your afternoon. Cheers.
Thanks, Brent.